Gold hitting a fresh all-time high today, posting its 26th record settle this year, ending the day just under $3,500. The precious metal now up more than 32% this year. The miners climbing even higher, the GDX ETF surging more than 70% in 2025, and the chart master is hitting the technicals on the metal's next move. So what did you see, Carter?
Well, really, they change places all the time, right? For quite some time, gold was leading and the miners were lagging because there's a lot of doubt. And then, of course, they flipped, and you can see the comparative chart here. It's been the real story. It's been the beta and the leverage in operating companies versus the commodity itself, with, just as you mentioned, miners almost doubling the performance of bullion. But that's the opportunity for bullion here. We have two identical charts of spot gold rather than the futures. And we've yet to actually make a new high, but it's very close, and the presumption is that we do indeed break out. The second of the two identical charts you'll see as annotated here, the presumption is that we move up and out of that formation, converging trend lines, call it a wedge, call it a triangle, doesn't matter what you call it. It is a setup for typically higher prices. So long gold.
All right, Mike, you noticed some bullish activity as well?
Yeah, I mean, so he referenced the futures. It's a COMEX traded contract. The December 3,700 calls were the most active. So just under 1,800 contracts trading there. Those things were about $56.50 each. So times 100 ounces times 1,800 contracts, we're looking at about $10 million in premium to the upside. Looks like probably 7% upside is what they're betting on by the expiration. And by the way, remember, these are options on futures. These expire in November, so it isn't even going all the way to the end of the year. That people are expecting that kind of move.
Yeah, and of course, there's the politics involved here. We saw a huge move in today's session on news that the tariffs would hit gold from Switzerland, but we hear also that an EO is going to be issued shortly or in some time that will clarify such a rule. Tim, what's your favorite metal these days, and how does that matter in your view right now to the trade?
I think it matters. I think that some of the drivers for PGMs overall are not necessarily the same. And I also think of the rhetoric that's going on between the BRIC nations and Trump. They are the biggest buyers of gold. And so the things that have taken gold to 3,400, there's not one element of them. And there's 5 core elements. And I don't need to get into them because everybody knows them. But if you want to buy Bitcoin, you definitely want to buy gold. Ultimately, the argument about the miners is the analyst community, as they should be, but are very far behind in terms of their spot gold price and their models. So most of them are around 3,100. Some are upgrading to 3,200. I still think they should be upgrading more, but it comes down to the operational leverage. Carter referenced this. These at $2,800 and $2,500 an ounce in gold a year and a half, 2 years ago, when inflation was peaking, these guys were actually not competitive. They didn't have the operational leverage. That has changed. So their costs have stabilized, and they are printing money right now. There will be a lot more upgrades, and the gold miners should outperform. I'm very long GDX. I'm long Agnico and Wheaton in IDEVO in my ETF. I think there's a lot more to go here. I don't think investors have missed anything.
Yeah, I would just make sure that investors aren't conflating what the administration is putting out around tariffs versus the fundamentals that support gold being higher. Tim alluded to a lot of them, but I think the friction now between U.S. and BRICS, definitely in light of the India tariffs, might be an addition to the bullish case here.
Here's a quick would you rather, Carter, before we leave. Bitcoin or gold? Which chart looks better?
Gold having, again, rested for 4 or 5 months and has the breakout potential, whereas Bitcoin is just in an uptrend and can continue.